Hey, it's Sasha Evdokov. It's March 27th, 2014, and today's focus is going to be on shorting stocks. Now, I hope you're trading well, and I hope you're doing great this week. For me, the opportunities are more favoring the short side. So if you're trading to the short side, that's kind of where I'm at if you're following me. And that's kind of what I've been doing. I haven't been trading too much because I've actually been working on a new book that's coming out here next month. It's called The 100 Tips to Trading Stocks. So you'll get a lot of insights and information and a lot of quick little tips to making you a better trader. So I'll come out with that book shortly, but it's just some little project I've been working on the side. And, I think you'll like it. So in either case, looking at the market and what's going on in the market, if we take a look at the S&P weekly, we can see that the market's been heading on the channel. So I want to first share with you on the market, and then we'll go into the individual stocks, because the market's been holding up pretty well, but the individual stocks have not been doing as well. And typically, if the individual stocks are not moving with the market, then you don't enter as large of a positions. At least I don't enter as large of a positions. If you have the market and you have the stock moving in the right direction and you have the volume and the juice and the behavior, then you can enter larger. But because we don't have all those things in alignment, then you need to be more cautious when trading. That means there's more euphoria in the market and stocks can be more volatile, but the direction might be uncertain. So you usually want to look at an individual stock basis when making your trading decision. So even though the S&P here is moving forward and moving to the upside, looking at the weekly, now on the daily it's bouncing around here and there, but if you're looking at the weekly, of course, it looks pretty smooth. Now, I thought it would break lower here on that week, about a month ago, and maybe test this 1550 level or 1500 level, but it didn't. It continued to power higher, or at least continue to consolidate in this channel. If you look at the Dow Jones, I mean, you have the same kind of situation. This channel's been held up, and you can't argue that. It's been held up for the last 2 years almost. But there will come a time when it does pull back, and it's just a question of when. So you need to be patient in the market, but you have to be cautious and learn to trade in various market conditions. Now, I don't think this is a full bull market anymore. It can still be a profitable market, but stocks aren't screaming every day to buy like in certain times of the year or in certain market conditions. Right now, it's more of a cautious time, so you want to be more cautious if you're purchasing this market. So let's take a look at Google here, and when we look at Google, you can see that we've had this channel line building for quite some time, since November, actually October almost, and it broke right here and on nice solid volume. And if you got in it right here, you would be up about $60, $55 to the short side, of course. And the reason I say look at individual stocks is because things are starting to look like it's rolling over. We got increasing volume here. It's picking up. You can see down here, it's starting to pick up, and it's moving not to the upside, but to the downside. So can it do a little test over here at the 1084? Yeah, it can, and then bounce higher. But right now, typically, when these long trend lines are broken, it doesn't just take a day or two for a stock to build and rebuild and get back higher. It takes weeks, it takes months, so it takes some time. It might take multiple months to consolidate, build, and then power higher, because that's what happens. They build, consolidate, and power higher. I mean, take a look at Amazon right here. Huge drop. And right here, it's consolidating and basing. It tried to base here, didn't do it. And then as it went higher here, tried to fill the gap, couldn't do it. So I watched this trend line right here. When it broke here, if you would have entered that, you would have done 35 points on the short side right here, watching that trend line. How do you know? Okay, well, right here, you have an increase in volume. Even if you entered it the next day, let's just say this day, you still would be up 25 points. Okay, so you're watching for these breaks and confirmation and seeing what the stock does and where's the momentum? Where's the momentum going? With these expensive stocks, the leaders, the companies that are good companies, great companies, they're rolling over. So what does that tell you, right? The action is easier towards the downside for me during these types of market conditions. Take a look at Netflix. This one was a great power play, actually. If we take a look at this one right here, watching this trend line, watching this line, when it broke right here, okay, increase in volume, just right a little bit above the average, stock rolled over, continued. If you played it with price lines like this, you could have seen that, okay, this was the price right here. You would have known that this was the price line support. Okay, when it broke on any one of these points, that's when you get in. And if you would have wrote it down, you make $65. $65. Imagine $65 times 100 shares, times 1,000 shares, right? Think about that. $65 run in just a couple weeks times 1,000 shares. Okay, that's the type of stocks and movements that you want to catch. Now these stocks, they do bounce very quickly, so when you go short, you want to start taking and peeling profits off. But looking at this market, looking at these great companies, they're rolling over. Okay, they're rolling over, at least with some slight pullback. You know, it might just come down a little bit further and then bounce. You know, you don't know. But these are the moves that you look for, and these are the ones you get in. Take a look at Priceline. Same thing here. We had a huge run. You know, I talked about this one on the break. Play it to the upside. So it broke here. How long? 150 point gain. And now it broke this trend line. And how far will it run? Well, here's a 160 point run to the downside. And to the downside's always faster and there's more juice. So I'm expecting this one to get to about 1,100 or so. Okay, so I'm expecting it to get down to right around here, this price level, because now it's getting back into this channel area right here. So it'll probably come back and test this 1,100 level. So these big stocks, you know, they're not doing so well or so healthy. And you can short a number of different companies. I mean, take a look at, you know, even Panera right here. Trending upline right here, a couple months. Break, huge. And it takes time to rebuild these. So again, another one. Goldman Sachs, here was our break actually was over here. Okay, it broke on heavier volume. You can see this big red bar right there. Went down, tried to go higher, tried to even power higher further, but it couldn't do it, and now it's breaking again. So it can come back to this 160 level, not too much more in this one, and then if it goes lower, then it might come back to 152. But until then, you know, it's this one doesn't have a lot of room to run because it probably will bounce at this 160. If it breaks lower, then it might get to this 150 area or 153 area, but for now, it's you know, it's probably going to bounce soon. And then we got other stocks like ENZY. Look at this trend line, break. Where is it going? You know, think about that. Think about that for a minute. All these stocks, more of them are pushing towards the downside. If you look at the tape, look at the market. So that's why I say I've been playing more short stocks than I've been going long. So here again, trend line, boom. There's a bunch of them out there. When they go short for a while. 16-point run, not bad. Okay, MPEL as well. Here, look at this. Look at that long pattern that was building for quite some time. And this week it broke, and it's breaking on heavy volume this week. So look at that. I mean, today it only moved 90 cents, but I mean, for this long pattern, I mean, this stock, you know, where can it go? $21? I mean, it might come only to the 50% retracement right around $31, $32 and then bounce. But, you know, these are long trend lines and they're being broken, and that's what's happening. Facebook, Here, this one, a lot of action in Facebook. You know, it's a hot trending stock, 112 million shares traded in a day. It's huge. It beats the QQQs, which is, you know, crazy. So this one's very liquid. It's good, easy to get in and out of. But right here, here's our support line right now. It might bounce higher. A lot of people like this one. They want this one. It's attractive. But once we're in this gap, typically the gaps will fill, and we still haven't fully filled this gap. So it might fill this gap, or it could bounce right here and then come back down. But we're under the 50-day right now. If you look at this 50-day line, we're under it, and we went under it on fairly good volume. So you know, this one needs a little bit of room to see about this gap here if you're not in it yet, or it could bounce here tomorrow. We'll see where the volume takes it. But you know, it did bounce off of this area today, and it might retry to test things higher. But for me, I'm still waiting on it to fill this gap. I wouldn't trade this one until it filled this gap, or it proves to me that it's going higher. So it's got to get back above this 50-day, because that 50-day, a lot of people watch it. And the reason I say this is you can see this by this doji. Went higher, went lower, finished back right here. And people don't know at this 50-day. So there's a lot of action at that level. So always be careful of those areas. Tesla, same thing. Talked about this one. You know, you could have shorted this one at the highs here. Okay. Took time to build right there. Little pattern. Okay. And started to continue lower and lower and lower, because I mean, it just jumped so high. When these stocks get overextended, they have to pull back. Then the gap had to be filled, because it gapped up huge. Okay, there it was, filled the gap, and it tried to bounce off of that, but it couldn't do it. So now it went lower, and now it's below the 50-day. So this stock, again, the signals are showing you lower, and that's why, like I said, I've been playing more short than I'm looking long. It looks better to me short on a lot of these stocks over this last week than they do long, and that's kind of the way I'm looking at it at the market right now. Same thing, this one, HIMX. Okay, here's our pattern weekly. That's the weekly break, heavy volume. It's breaking this week. You know, there are some other positive stocks out there, but you know, there's for me, I'm seeing more to the downside. That's why I'm discussing the video on it, on the shorting. FULL. I wanted to mention this one. It's more of a penny stock, I would say, because it's less than 10 bucks. Look at this stock. You know, since December, it's been building, and you know, in one day, you have it take out a couple months worth of gains. That's why you always want to take some profits. You always want to take some stuff into strength. You know, it's not a huge dollar stock, but for these reasons, you always want to be careful. Here's a penny stock from last week, what we talked about. This is the patterns you were watching, right? A pattern you were looking for, and then boom, the break. How did we know? Again, from last week, we talked about it. Volume, consolidated a couple days, continued, right? Huge gain. We would have had, you know, 30% gain. You know, 5,000 shares on this stock right here, 5,000 shares. You know, you could have made about a buck. So $5,000, or yeah, $5,000. So here, ORBC, same thing, price pattern, breaking, boom, to the downside. And last one, CMG, talked about this one, breaking before, broke higher, retested here, and then powered higher. I was long on this one after the break right here, but now proving otherwise. Okay, these signals tell me when these bars come in, you need to get out and step aside or switch directions. You need to be careful during these types of things, and when these big stocks, they break, that's the kind of stuff that you want to be careful of. So I'm not going to dwell too much more on the market today. Had a lot of things, house projects here going on. I got some bees coming into the house and stuff like that. So I've been dealing with that. But I did want to do some market recap for you. Just give you some insight. That's the stuff I've been watching. I've been looking at more. more of the short side in the markets, because I mean look at it right here. Netflix, imagine $78 gain in just a couple weeks. Think about that. Think about 1,000 shares, even 100 shares. 100 shares times $78. Make a fortune. So watch these kinds of things. They take time to set up, and then you got to pounce on them when they break. You know, it doesn't happen overnight. It takes time to consolidate and build higher. It takes time to go lower. But when it goes lower, they're usually shorter because people are getting out much quicker. When they go higher, it's a longer progression. Look at this. It's much longer, but when it goes shorter, it only goes for a little bit, right? So always be careful when going to the short side. But that's why I'm going short. It's more to the looking at these big guys. They're kind of breaking some critical areas, so you have to just watch out and be careful when you trade. Hope you've been trading well. I'm going to try and do finish up this book for you guys here over the next couple weeks, and that way if you're on the newsletter, you can get a nice discount from it, and it'll be some good insight, good trading tips, and I got a couple other ideas for some other good books for you as well if you're into more reading rather than video courses. So that's kind of what's on the agenda. That's what I've been looking at, and hope you're trading them well. I hope you're watching things closely, and if you're not trading the market because it is acting a little weird, then that's okay. It's okay to just step aside, chill out, take it easy, and do some other things. You know, read a good book, you know, watch a good movie. So take some time to enjoy life a little bit as well. Thanks for watching, and if you have questions, feel free to send me a message. I'd be happy to get back to you as soon as I can. You know, can't always do it very quickly just because I'm involved with quite a few different things in the markets as I'm watching things, so I can't always spread my attention. But if you send me a message, I'm always going to try to get back to you as much as I can or as quickly as I can, as long as you have a good question. So I'll do my best. All right, thanks again, and I look forward to seeing you next time.